Hi there. Just a quick review of 31st, December 31st trade. I took three entries. I'm just quickly go over what my thought process was and what I exactly did on that particular day. So obviously you can clearly see on that particular day we were here, right? Yeah. So I'm just quickly move to H4 time frame. When I was open the market price was here. So I don't know whether it's going to go higher or it's going to go lower since the buys said the sell side is and sell side has been taken, swept, and price was here, not closed yet, but price was here. So I was pretty confused, right? Okay. If you want to go to 15 minutes time frame, I was in 1 hour time frame. I can see one thing like price still inside exactly at this breaker, still inside this fair value gap. So price stopped here. Price floating around this point. So I'm not sure whether it's going to hold or it's going to dump. I don't know at that particular time. So as far as I know, I got this beautiful M15 fair value gap. So inside this range, I need to be bullish. And we got the liquidity sweep, change the state, big displacement. The thing is, it is in the premium. It is in the premium. For the overall swing, we are at the breaker, Harley fair value gap, around the inversion fair value gap. For this whole swing, we are at what? We are at somehow like a discounted level for sellers. So it's a good place for short, right? Not it's a good place for buy. You can buy here, but you can't buy here and expect higher prices. That's not optimal thing. So that is the reason why you are not allowed to focus on this fair value gaps. That's the reason why it's not worked on that particular day. But unfortunately, I marked this fair value gap, and I want to see what's going to happen that after that. uh, this is M1 time frame. Both are M1 time frame only. How many M1 time frame I have here? So this is our M1 time frame. As soon as the market opens, this is the market open, right? So market open, price start to dump. Like as soon as the market opens, price already doing something inside the H1 bullish, sorry, bearish fair value. It's kind of print a high, print a low, swept. We got to change the state. We got this big inversion, and you can clearly see that reaction, like the rejection and displays lower created this inefficiency, and it's beautifully hold the price and pushing lower, right? So when the market opens, it's this is the market opening candle. It's kind of before that, it's already flipped. It just open and keep on rejecting, drop lower, open the fair gap, and it's keep on dumping towards downside. So what I did in on that particular day is I bit confused with this 50% of the H1 breaker. If I go to H1 time frame, I can explain that. So this is H1 time frame. Yeah, I just marked this last candle. So the 50% of the candle, I just marked it out. So here we got the inversion, right? We got the big displacement. We inverted all the M15 gaps, and we have the beautiful fair value gap, which is also in 5 minutes. Created a 5 minutes, 15 minutes fair value gap right here, and price start reacting the consequent encroachment of the breaker of H1, and you can clearly see the inversion and that consequent encroachment holding the price pushing higher. So I expect the price to reach here. If it flipped, we can expect the higher prices. Otherwise, we need to see some sort of selling price action because all by H1 holding M15 flipped. Here it's formed M5 M15 5 value. So you need to be bearish and expecting lower prices like this and this. So as soon as I identified here the M5 fair value getting tapped, M5 Farallip getting tapped, it's not entering the H1, it's H1 already getting, sorry, M1 Farallip already getting tapped, but the price rebalance and this at this point it's tapped the M5, not the M1 or M15, and we can clearly see the change in the state of delivery, and we can clearly see the fair value gap, engineering liquidity, swept, respect the consequent encroachment. As soon as it's closed below this fair value gap, sorry, close the last stop, close candle, I entered my position for the stop at the high, like a consequent encroachment level of this fair value gap because it's already swept the high and closed below this range. There is no point for the price go up and do something like that. So I just put my entry and set my stop right here. And my expecting draw on liquidity was this, but I want to see what's going to happen here. If it's break and display is lower, I can expect the draw will be this. If it's fee, then it might reverse, go all the way up and rebalance the M15, M5 value gap, and then it's dump or pump. Then it will give some reaction. Then we can decide it. If it flipped, we can expect higher prices. If it's hold, we can expect lower prices. That's it, right? So as soon as I get this candle, which is pretty close to this swing low, um, I break on the trade. As soon as I get this candle, I break on the trade. Next candle break stopped me out. But as soon as it stopped me out, I entered the buy entry with the 30-second confluence, which is so stupid because it has a lot of data. Like it has a lot of things, bro. Which it has a lot of things for me to sell here, but I don't have anything to buy here. It's not even sweep the liquidity. It's not even give the change in the state. It's not even give anything. Just just because it's close above this gap, I instantly bought the market and put the stop at this one, expecting the M15 fair value gap, M5 fair value gap, like this fair value gap. But what happened here? It just engineered the liquidity, leave the liquidity. This is the swing which give the change in the state, right? It's give the pullback, drop lower, take that liquidity again one more time pullback. This is the swing that give the change in the state. Fail to clear above this high. Give 99% retracement for this swing, and it's dropped all the way down to the drawn liquidity. Then it's been some market maker buy model here, like inversion and consolidation. So you can clearly see that inversion and the consequent encroachment keep on holding. We can see the internal sweep change in the state, fair value gap holding. So this is where we can enter, put the stop at this point and expect a higher prices. That's a beautiful entry for me. But so what kind of mistakes I did on that day is this is a perfect entry. My stop loss was here, not even here. Here, price not even approach my stop and it hit my take profit. But before that, what I did, I instantly bought, even though it's not even a swap, nothing here. I instantly bought. There is nothing. If you see the 1 minute candles, there is no point for me to bought here. I entered one contract here, which is so stupid. Purely the revenge entry with the same idea, like it will rebalance the fair value gap. That idea. So next, what happened is it's kind of swept these both lows. Take this both, not swept. It's kind of break below and close. It got the candle close here, but unfortunately, as soon as it's get flipped, I entered my position here. Put the stop at the low, expecting the same target, same idea. What I did here, I again remarried to the game, same idea. As soon as it's closed above this range, like it's take the whole idea, the whole thing is this, bro. This is the thing which confused me a lot. That 50 percentage of H1 breaker confused me a lot. I expect it will give some reaction. That reaction will probably be at least to this point, but that not happen. That happened eventually. It's they cleared out the sell side liquidity. Then it's gave the inversion and it start moving. This inversion not only in M1 but also in all time frames. If you go to M5, you can clearly see that inversion. It's created a fair value gap and it's keep on holding until it's reached this point. Still, it's not cleared out this high for the whole swing. This is the equilibrium level, like the equilibrium level. Just tap, just sweep the equilibrium level, give the change in the state, inversion, drop all the way down, take this liquidity, drop down to the H4 bullish fair value gap. So the draw is obviously lower on that particular day. So price not even entering that level. If I move to M15, you can clearly see that fair value gap. We got this up, bro, 1 hour holding. We got this inversion. We created this bearish fair value gap. We should look for sell inside this range and targeting opposite liquidity. That's the optimal thing. Price rebalance to the consequent encroach, not consequent, like the discounted level of the bearish swing, H1 fair value gap, holding, inverted all the gaps, it created the gap here. Inside this range, we should be bearish, but it's not even entering this point. It's drop all the way down, swept the liquidity. You can clearly see there is no structure, nothing. It's just a rebalance. Go all the way up. Go all the way up. You can clearly see the rejection, right? The lost fair value gap swept the equilibrium level. Then what happened? Big displacement. Drop all the way down to the target edge. But the timing is not pretty good. It's around 1 o'clock, 2 o'clock. But yeah, man, this is what I did. Three mistakes. Yeah. The entry is pretty good. It has a lot of context here. It tapped the 5 minutes. We got to change the state of delivery, and we can clearly see that engineered liquidity swept, respecting the consequent encroachment, and we get the break, and we get the break. The order flow is beautifully lower, and there is not even a single swing has been break displaced for me to go for buy actually. But unfortunately, I was married to um that that idea of rebalancing to the M15 fair value gap. That's why I keep on buying here with this kind of thing. So I thought it will do something, but it was not actually. The round liquidity is here. This it was clearly met before it's moving further higher. So this entry is pretty good, and this inversion is also pretty good. Give at least 1:2 here. It is also give 1:2 here, but unfortunately, I didn't capitalize anything, bro. I'm waiting patiently for this entry. It has a lot of context, but this entry, nothing here. Not even a not even a fair value gaps. Not even a fair value gaps formed here, right? I've just entered due to impulsive, and this is. I thought it's a perfect entry, but it is also not. At this point, at this displacement candle, I was like, I thought I was right, but it's not even created a fair value gap. Not break above this high. It closed above, yeah, but it's not break above. It's rebalancing this recently found earlier, failed to clear out. Instead, it's break, rebalance, drop all the way down to the opposite liquidity. But what I did here is I entered my first position here, and I entered my pyramiding position here, and I entered my pyramiding position here, and I expecting my trade to play out. But the pyramids and the entry, everything is bullshit, bro. If I entered right here, it would be a great, it would be a great entry in this innovation or in this place. It would be a great idea an entry, but this is purely like my original stop hasn't been hit, but my take profit hit. But I just flipped the bias, having this idea in mind. You have to wait, bro. You have to wait and check a lot of things. That's it. That's it for that particular day. I have to be consistent on posting these videos, and not for anyone, but for me. So all good. Let me post more videos in following days. Peace.